In this episode of Bitcoin for Millennials, I talked to Tim Savage. He's a CPA who followed the traditional finance path to career success, but after relentless study and analysis, he concluded that Bitcoin isn't just another asset. It's actually the only viable way for you to survive the coming tidal wave of fiat debt. So if you've been wondering how to protect your wealth in times of soaring inflation and increased financial uncertainty, then this episode is for you. If you find this conversation valuable, please like and subscribe on this video or follow me on any of your favorite podcasting platforms. All right, let's dive in. All right, Tim Savage, welcome to Bitcoin for Millennials.
Thanks for having me on, Ram. I'm very excited to talk Bitcoin with you for the next hour or so.
Yeah, I'm excited to have you on. As I just told you, I spend some time in the LinkedIn trenches each week to kind of look at what people are saying about Bitcoin, and there are surprisingly a lot of bad takes. But sometimes I see interesting posts come along, and that's where I found you. And your post said, sometimes people ask me why I'm so hardcore on Bitcoin and why I invest so much in a risky asset, air quotes. What they don't understand is that I actually view Bitcoin as the safest, lowest risk option for storing wealth, because saving in traditional assets is less viable for younger generations, and Bitcoin offers a generational asymmetric opportunity. This is coming from a person who is completely logic-driven, pragmatic, and critical skeptical of most things. I'm also a practiced lifetime learner, and below are a few of my career milestones. So you mentioned you have a business undergraduate, a master's in accounting, you passed the CPA exam in 4 months. You worked at a Big Four firm. You achieved partner at a national firm at 31, and you studied Bitcoin for thousands of hours. The world is stuck in a tidal wave of fiat debt, and I've contemplated many scenarios of how one can position for the imminent economic reconciliation. Bitcoin is the only viable path that I can find. Just to start, and perhaps this is a big question, can you kind of unpack how you ended up in that contradictory spot, basically? So you follow this traditional path. At some point, you figure out Bitcoin. Now, of course, you are advocating for it. But what is the arc here? When did you kind of stray off this traditional path and ended up being such a rebel?
I've been in the space since 2017. And really, I would say I became a lot more orange-pilled around 2020. Not to say I wasn't as early as 2017, but just 2020 was kind of that turning point for me. But getting into my background, so yeah, I did follow kind of that traditional path of, you go to school, you go to college, you get your degrees, you go into the workforce, and you perform. And so I followed that traditional path. I consider myself to have been very successful in that path. You kind of get to a point in your career where others perceive you either through title or through experience or just through age as having more, depth to what you're saying. In other words, a college kid coming out of, freshly graduated, making that post is probably not going to, that won't carry as much weight in the LinkedIn community as someone who has the title partner and has experience and credentials behind their name to say hey, here's why I'm thinking this. And that's just by nature of, I think, the human experience is you just listen to people who have experience. But yes, I fully agree that the point of the post was not to kind of toot my own horn and say, hey, look, I've done all these things, look at me. It's more, hey, I'm trying to qualify myself as someone who has gone through this career path, who's thought at great length of economics, which is a huge passion of mine, who's thought of Bitcoin, who's been that person early on in 2012 who kind of laughed at the idea of Bitcoin. And then throughout my experience in life, I have reconciled and just like a lot of Bitcoiners have, when you sit down and look at it, you're like, wow, this is actually a very interesting and amazing asset. And there's so many different facets to it. And that's really what that post was getting at was, hey, I am credentialed, I have experience. And when you look at the current situation of the world, Bitcoin is the only thing that makes sense to me.
I think the cool thing about Bitcoin, also now with all the people that I talk to, all these different people from different walks of lives and backgrounds and ages and levels of, professional success or whatever, they end up at the same very logical conclusion. This is the lowest risk, most safe, predictive asset that I can use to protect myself from this problem that I've identified, right? And that I think is just fascinating, because there a certain legitimization or truth or whatever emanates kind of from that. When like so many different people see that, there must be something to it. And I wonder, like, was your personal journey, like just your real life journey, was that also very lonely? Like, did you find that hard to kind of like internalize? Because I can imagine there's kind of like a struggle between your entire experience with traditional finance and accounting and following this path to then go from that initial impression of it being something not worthy to actually thinking it is the most important financial asset in the world. Like, how did you kind of like cope or deal with that, like those two things clashing?
Yeah, good question. I wouldn't say it was a lonely journey. I think what's the best kind of interesting part of Bitcoin is there is this very strong community of folks who are like-minded, and a lot of Bitcoiners tend to kind of support each other. And yes, there's discourse, there's disagreements, but we're all kind of agreeing on, hey, there's something really broken in the monetary system. There's this thing called Bitcoin that's very interesting as both a network and a monetary asset. And we can at least agree that this thing is going to be paradigm shifting. And so we can kind of center around that, and that creates a community of people who are willing to kind of live life together. So it wasn't really a lonely experience. I think really for me is I knew that at the time I was getting out of college in the early 2010s that, okay, there's a problem, and that problem was exacerbated by 2008. I wasn't in the working world at that point, but I think everyone, who is, older than probably 10 at the time realized that there was something broken in the system. And you have the 2008 financial crisis, and then you kind of look at the debt load, at least at the U.S. debt load, since we're the reserve currency, that's the most important debt load to look at, and realizing that as I was graduating, it's already at $20 trillion. And I don't think people realize the scale of even $1 trillion. And looking at the history of our deficit spending and our debt load and how it's been snowballing, you just can't look at that and think, this is good. This is going to work out well. Things are, okay. Like the data is great. And it's like, no, this is on the path to unsustainability, perhaps through prudence, through wise leadership, we can reverse course, or at least create a softer landing than on the course we're currently on. And what I saw is that throughout the late 2010s and early 2020s, this is not being managed responsibly. And so, you get to COVID, and they shut down the government, or they shut down the economy. And by the way, you're not allowed to disagree with that, essentially, and exercise your own personal freedoms. And on top of that, the U.S. government prints $5-6 trillion of debt out of nowhere, and they go into essentially yield curve control and quantitative easing, and it's really destructive to a currency. And, mathematically, that's kind of your point of no return as the debt's spiraling up to 25, 30 trillion, now 37.5 trillion today. That was kind of when, you look at it and you're like, okay, things are broken. How do you position yourself to capture the upside to inflation, to protect your family, yourself, and store all the time and energy of your labor? What assets exist out there? And you can look at traditional assets. You can look at gold, and I have nothing against gold, but that's not an asymmetric opportunity. That's just an opportunity. And by the way, gold, as we know, it fails in portability and scalability, and that's why essentially over time banks paper over gold through notes, and then eventually fiat currency. So Bitcoin is the antithesis of that. It's the complete opposite. It's something that's scaling and has, gold-like properties, and it's just better in every single way. And then you look at, it's really a decentralized digital commodity. It was a discovery. This has never existed in the world before, and it's quite amazing. And it takes a lot of brain power to kind of understand what it truly is. And you can do it in a few hours to gain kind of the overview idea, but really, if you truly understand it as a network and as an asset, as a commodity-like asset, there's just no way that you walk away from it and think that, this isn't a good idea.
Bitcoin custody is evolving, and OnRamp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, OnRamp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all time. Beyond custody, OnRamp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you. My American friends, I've got something for you. If you're into Bitcoin, you want to grow your stack in any way possible. What if you could do it effortlessly just by spending your fiat? The Gemini Bitcoin credit card is designed to help you do just that by giving you instant Bitcoin rewards on every purchase. Just use it like any other credit card and earn back up to 4% on transportation, 3% on dining, 2% on groceries, and 1% on everything else. There are no annual fees for this card and no exchange fees to receive your Bitcoin rewards. Sign up to get your limited edition Bitcoin Orange credit card and earn a $200 Bitcoin bonus when you spend $3,000 in the first 90 days. You can find more information and terms in the description below, or go to gemini.com/Bram to sign up today and start stacking effortlessly. That's gemini.com/Bram. So you got out of college with, and the debt was 20 trillion, right? So that is 15 years ago. And now it's 37 trillion. So almost doubled in 15 years within your working life, within your career, right? If you look at that, so my first thought would be, okay, so you see that number go up. Did the life in America get any better from your perspective? So if you take on that more debt and you think, oh, that debt is used to spend on, to create stuff, value for my citizens, or however you want to construct that sentence. Those two things also don't really match if you have that number in your mind, but the quality of life doesn't go up. Like, is that something that you also reflected on? Like that was the first thing that I thought about.
Yeah, I would say for myself personally, I've been very blessed to be able to be in kind of the higher earning category throughout my career, and I've been very prudent in how I save and invest and approach markets. But I can see certainly, if you look at the data and statistics, it's like the top 10% of wealth or households own over 80% of worldwide wealth, and the bottom 50% own less than 2% of worldwide wealth. And so essentially what that means is this whole fiat system is just perpetuating a widening wealth gap. And so a lot of the things that you see, culturally and socially, especially a lot of the kind of dichotomy and politicization and the pointing of fingers and just kind of distrust and anger among political parties, among young people, and older people, and just the social unrest. Those are all symptoms of this fiat system. It's just people feel that there's something broken, and it's growing and getting more painful, and they're not quite able to put their finger on it until they understand that, hey, it's the monetary system that's driving a lot of this inequality. And by the way, this is getting worse. It's not getting better. It's basically mathematically going to fail and cause a lot of pain. It's no different than any of the other monetary regimes that have existed before us. If you look at Great Britain, our preceding reserve currency prior to the dollar, it was the same path. And really, that's in some way, that's what sparked the whole American Revolution. And of course, that was several hundred years ago. Rewind before then, I mean, it was Spain, it was Mongolia, it was Rome. All these empires go through the same arc of, as Ray Dalio might say, kind of like the arc of a monetary regime or a civilization. And it starts off through a kind of revolutionary event, and then you start peaking, going up, and life is great. You peak, life's really great, and then your currency starts to fail inevitably through debasement and just irresponsible spending. And I think if you look at the U.S. dollar, it's basically the same path that we're going on, and it's all propped up on credit and government deficit spending. And in the early 2010s, we were basically ZIRP policy, and heavily QE coming out of 2008. So things felt okay until COVID.
So zero interest rate policy, right? Like so cheap money, basically.
Cheap money, living on credit, essentially. Yeah. Exactly. Everything's propped up on credit, and while you're spending your credit cards, you don't really feel the pain until that reconciliation happens. And there's a big event that causes a lot of distrust in the system, because it's all propped up on trust, essentially. And exactly. then you have COVID happen, and they just print an exorbitant amount of money. I mean, like 40-50% of the M2 money supply out of nowhere. And they helicopter money to U.S. citizens through, basically stimulus. And then you look at inflation today, and of course the data, this PCE and CPI prints are obviously cooked. They're definitely held down by basically two things. One is energy, the cost of energy, because they're moderating the supply of that right now, and housing, because the rates have been high. Housing and rent has been moderately stifled. That's going to go up now that cuts were just set in motion. But those are cooking the data to show inflation as being lower than what it actually is. The real rate of inflation is much higher. It's got to be in the low 10s percent, or at least high 8 to 9%. People are feeling the pain of it now, of that wealth gap is even occurring in the U.S. In fact, I think even today, 70% of households are living paycheck to paycheck. And then the question is just, how much longer can that go on? And, mathematically it can go on longer, but, the symptoms of social unrest are going to start appearing more and more. And that's when you get a regime change, typically.
One step back, when you said, Bitcoin really embodies American values, I would agree to that, right? I think Bitcoin incentivizes an extreme form of equality of opportunity, in a sense that if the money is neutral and it incentivizes you to create real value, to earn the hardest money to ever exist, then people are going to fight over that with their productivity, basically, right? And that levels the playing field, in a sense that everyone has the same opportunity, conceptually, to gather that money, to earn that money. And so I think it's interesting that you see that now like that, because that sounds quite rebellious for someone who followed the traditional path, right? But you also said in 2010 or 12 you just dismissed it, laughed it off. So like those two things I also find very interesting, those two ways of looking at it. Can you remember what kind of like shaped your initial impression of Bitcoin? Like, did you actually understand now, maybe when you look back, why you even dismissed it? Or was it perhaps kind of ignorant and just be like, okay, this is just a nutty magic internet money thing? Or was there more behind it?
Oh, yeah. I mean, I think it was a typical response. I remember the exact moment. 2012, one of my best friends walked up to me, and we were kind of in the later stage of college. And he said, "Hey, Tim, you should check out this Bitcoin thing. I think you'd be really interested in it." And I think at the time it was trading around $200. And in fairness, it wasn't explained super well. But I literally, being kind of the arrogant business major, I laughed at his face and said, "Hey, this is going to be a fad. This isn't going to work." And then, fast forward about 6 years, and my friends are trading it, and it's really taking root. And I was kind of like, "Whoa, what is this thing?" I'm interested. And as I gained a better understanding, and kind of through my own worldview and life experiences, realized that this is a very necessary asset in the world. I realized, oh my gosh, I was so wrong about it back then. And I actually reached out to my friend and apologized. I said, "Hey, I'm so sorry. I wish you were right. I wish I had listened to you. But guess what? I think we're still very early on in the game. And back then Bitcoin was trading at like 3,000 or 4,000. So now that seems like so cheap. Just as 10 years from now, 100,000 is going to feel cheap." But yeah, I think that was kind of a pivotal moment for me. It was realizing what this asset was through a collective experience of my own and hearing from others. And what I found is that a lot of Bitcoiners have a similar experience. They also tend to be the people who admit that they're wrong and tend to have a curious mind, tend to be, want to learn about things. And that's one of the prevailing, I think, kind of belief systems or the ethos behind Bitcoin that kind of underpins why it's growing so organically.
Yeah. I think also something you said in the post, right? Like I've contemplated many scenarios, or like you said, I after thousands of hours of study, I can't find a realistic failure point. In fact, I've only grown more bullish since the beginning. That I also think is a very interesting thing in terms of in that journey, because you're trying to break it, right? You're trying to not make sense. Also because it goes against everything you think about money or whatever was taught to you, right? Or you're learning new things that you never even realized were a thing. And then when you get to understanding, I would say, the problem that Bitcoin is solving, right? Or the reason that it exists, basically, your conclusion is that you describe Bitcoin as the safest rather than the riskiest store of wealth. Can you kind of walk through how you got to that conclusion, which obviously sounds counterintuitive for most people if you think it is the safest, specifically that word, the safest. Yeah.
Yeah. Okay. So where to start? I think you must kind of look through my perspective first, which is things are on their way to being broken. And what I mean by that is just the monetary system being in a debt spiral. I mean, look at some of the data points. As we mentioned, $37.5 trillion of debt today. That's one. Deficit spending is $5 trillion this year. It's probably going to keep increasing. They're just going to keep raising the debt ceiling because mandatory spending, nobody wants to cut that. And then they have discretionary spending, and we've already seen through Doge failing, we can't really reduce the spending. Otherwise, we will certainly go into an economic recession or depression. Debt to GDP is 120%, which means that we can't theoretically produce our way out of the debt load. Unlike, a lot of boomers will say, oh, well, in the 70s and 80s, we had 20% inflation. And the counter is, well, the debt to GDP was 30 to 40%. You could theoretically produce your way out of the debt load, but we can't. That means every dollar that we're financing through debt cannot be outproduced. It means it's actually spiraling the debt load. And so that's an unsustainable system. If you kind of look back through history 100 years ago, typically every 100 years, there's some kind of major catastrophe in a monetary system. That was the Depression, the Great Depression 100 years ago, almost to the year in a few years. How did that come into fruition? Well, World War I ended. A lot of people in America came back and were happy and started spending money. Banks were loosely regulated. The government, at least the central bank, was actually more austere back then. But what was happening is the private banking sector was lending kind of in a similar form of 2008, where they had very loose regulation. They were just lending. And guess what? Everyone was just putting that money into the stock market, because that was really the only device that you had on a national and even to some extent a global level of storing your wealth. And so that's called a credit bubble. That's a classic description of it. And so people were just pumping money and all these borrowings, all this credit into stocks. And what happened was there was a reconciliation on Black Thursday in 1929, and all of that credit immediately got washed out. And so the economy tanked for 10 years, and there's a lot of pain. The central bank did not print. They just kind of let it happen, which was more in line with classical economic theory, or Austrian theory at the time. And they were criticized for not doing that. And then the cherry on top was in 1930, we got the Smoot-Hawley Act, which was it was a set of tariffs that the U.S. employed, and it was a very protectionist set of tariffs. So fast forward 100 years to today, what's happening? Well, our credit spending is insane. Instead of private debt, we have public debt, which is even more of an egregious kind of debt load, because it can perpetuate, especially if you're the reserve currency like the US dollar is. And so, and we're going into protectionist tariffs. And so it's almost like a mirror set of events repeating 100 years later. And I will tell you, it's certainly not going to end well. And so we know that people are smart enough to know that inflation is not good. If you just hold the currency, you need to do something with it. And with our kind of neo-Keynesian system that we operate under, you're incentivized to spend the money, or if you choose to save it, what assets do you save your time and energy into? And so that's stocks, of course. But if you look at stocks, the PE ratios are just insane. They make no sense. They're 30, 40, 50 sometimes. If you look at real estate, while it's a super illiquid asset, historically it's held value well, but it's still real estate, and the carrying costs of real estate are expensive. By the way, how do you invest in public real estate outside of your house? Well, basically you just have REITs or some type of private equity, and that's costly, and you pay a very expensive management fee. And so what are bonds? Well, bonds, the real rates on those are negative. You're losing money a little bit slower than holding in fiat, but they're not producing. And then commodities. And commodities, you have gold. It's a good asset, but they also carry a geopolitical risk, and they're still not as liquid as Bitcoin. And so when I say Bitcoin offers that asymmetrical opportunity, well, it has all the properties of gold plus more. It's perfectly scarce. It's accessible. And guess what? All the tailwinds now from a regulation, policy, and just market industry perspective, they're all in place for it to go boom. And as the masses start gaining an understanding of what this asset is, they'll realize that, wow, this is really good. And as the system is failing in tandem, the kind of the fiat system is failing in tandem, there's going to be a flight to scarcity. We're already seeing it right now. And Bitcoin is poised to consume a tremendous amount of that capital.
So when you were comparing all these different assets that you can basically use to start protecting yourself, would you say it was clear cut for you that Bitcoin was the outlier here? Or like how did you kind of like get to that point? Were there others that almost convinced you that Bitcoin wasn't really the only viable path? Or like how did you compare them? Like when did you decide to be like, okay, it is Bitcoin only, I'm max Bitcoin basically?
Yeah, 2020. I mean, today I would say over 95% of my own time and energy is stored in Bitcoin. And that just continues to grow. I average into it, I trade it. But yeah, you kind of realize what it is, as most kind of hardcore Bitcoiners have come to the conclusion that this thing is going to crack up because people are going to want it. And yes, you can store your wealth in other assets that are scarce, but this one's going to be the fastest horse, and it will be globally adopted. It's going to just consume value at an unprecedented rate. And it's almost like this black hole that just everything around it starts getting sucked into it because it's just better and more powerful by design and by nature of its being a decentralized monetary scarce asset. It's just better. And so that's kind of what led me to the conclusion is I've studied it, I understand it, and oh my gosh, this thing is going to be absolutely, in nominal fiat terms, millions of dollars per Bitcoin. And one of my favorite analogies to give is, there's 8 billion people in the world, give or take. What if there were only 21 million houses in the world? And let's pretend even those houses could hold 20 people, an occupancy rate of 20. Okay, so you have around 400 million houses for 8 billion people. That's still a insane ratio. And so as people look to shelter their time and energy into a hard monetary asset, that's simple math. It's the Bitcoin. There's only 21 million of it. This thing is going to just absolutely consume fiat.
If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want. Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read, and it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order.
Okay, if you just look at the characteristics, why would you invest in real estate? Why would you invest in stocks? Like, what are the pros? What are the cons? Like, almost that basic, right? So what does it have? What doesn't it have? And then perhaps that is similar to the like tables or images that some people have seen about like the portability, verifiability, can you actually own it and stuff like that. Is it just that simple? Is it just, perhaps it's too simple and that's why people don't get it, but would you say it's just that, like be rigid about it and just rational about it? Or yeah,
I think it is that simple. I mean, you could go into, adoption rates. You can compare it to the internet and it's growing faster. You can look at Metcalfe's law and the power of network effects. You can look at power law, and in every single graph, it's just growing up and to the right. It's hockey sticking on an exponential level. And then you can look at some of the more qualitative factors of, the federal Bitcoin reserves, state Bitcoin reserves, BlackRock products, ETP, ETF products surrounding Bitcoin. But I think it really is just as simple as, and I'll caveat, you do need low time preference. If you're trying to just, spike a gain, well, that's different than if you're trying to actually store your time and energy over time. And so you do have to have low time preference and let the volatility work itself out. But yes, I do think it's that simple. It's just, what is going to be the best thing that in the event of an economic reconciliation is going to retain its purchasing power in a very real way, and also be, viable for a post restructuring event.
Yeah, I think this was a great explainer. This is also something that is happening today, right? Like it is already happening. When you say asymmetric opportunity, it's not only for us as just general people, but I think also for countries to actually make that move to at least prepare themselves to a degree when this literal house of cards, I think there's no real argument against the fact that it's a house of cards, will fall down. So would you agree with that being the opportunity, just the mathematical assurance, as you said, plus the how the system is constructed?
Absolutely, I would agree. And to tie it back to like the tidal wave of fiat debt, I mean, again, I went on a long-winded way of explaining that we're in this circular debt loop, and there's no way of getting out of it if you don't have access to scarce assets. We're seeing this in China, for example, is, the government allows them to buy gold, but not Bitcoin. And in fact, I had lunch today with a good friend of mine who is from China and has family there. And he's like, at the moment, if Bitcoin was more accessible to Chinese citizens, they would instantly buy it. There's no question of it, because they're being debased so badly. Their economy is in shambles. The real estate industry, which has been their economy, is just completely blown out. And, people are hurting and they need scarce assets to fly to you. And that's the whole idea, is you've got the scarcest of all assets that's pristine still. And that is the asymmetric opportunities. People are going to fly to this. And the earlier you get in the game, the more purchasing power you're going to retain. And, talking about the tidal wave, it's, Americans especially, but a lot of people are just kind of in developed country riding this wave. And it's going to crash. We see it coming. The math says this is gonna break, and it's gonna be really painful. So how do you position yourself? Can you maybe slide off it? Can a chopper come in and help you get out, or a life raft? And really that's what Bitcoin has to offer, is there's other scarce assets that will retain purchasing power. But I think as Bitcoin gains critical mass adoption, it becomes more understood by the general population and adopted, it offers that asymmetrical opportunity, and relative to other assets, it will retain its purchasing power much better. And by the way, when there is a credit wash, if it doesn't wash upwards through a credit default, a big print essentially, if it happens through a credit default and your numbers come down and you have more of a immediate depression style event, Bitcoin's price in dollar terms or fiat terms, it's going to come down too. But just everything washes out, and relative to other assets, relative to stocks and gold and fiat currencies specifically, it will have much stronger purchasing power, because people will fly to it. They'll realize that we need an alternative that has scarcity baked into it.
I'm super surprised that people whose job it is to figure this out and understand what the best way to allocate the capital that they manage, whether it's their own capital or other people's money, they are still dismissing Bitcoin as volatile, speculative, risky, being a Ponzi scheme, tulip bubble, etc. How do you respond to that when they dismiss Bitcoin still like that? I know you've been there too, right? But that was also then 13 years ago, and for example, the debt doubled, right? Yeah, how do you look at that? Are you also surprised or not? Are you annoyed, or what's your take on that?
Yeah, I think it depends. Let me back up. I have a lot of grace with people. I'm a very giving person, very generous with my time, my own money, education. And I have no problem having a philosophical debate, having a good-spirited discussion. But when people kind of approach it in a really aggressive or demeaning way, no, I'm going to approach them with data and facts and kind of force it into their mind of like, you're wrong about this and here's why. That's rare when that happens. I think a lot of people are more curious these days than anything, and I'll point them to the right resources. So, can you read books? Have you read the Bitcoin Standard? Have you looked at the data, the economic data? Did you realize the fact that, 3 weeks ago, the Labor Department revised down the Biden, fourth year Biden labor by 1 million jobs downward. So there were basically no jobs. So you realize that was the largest, basically flub in labor data in history. And like a lot of people are just so shielded to that because they're used to their day to day. They haven't really lifted their head ups to think about this type of stuff. And so I'm trying to serve as this kind of orange beacon of light saying like, hey, you need to start thinking about, if something were to happen, you should prepare for the worst and hope for the best and hope that, this never does happen. There's a soft landing. But have you thought about what would it look like if things broke? And a lot of people immediately go into like roving gangs and like civil war. It's like, I don't think we'll go to that. I think that's not the base case. But, is there a scenario where the supply chains are broken and world trade ceases for a few, years or months? Like, what happens when you don't have food to put on the table? What happens when all of your utilities turn off? Americans are not used to this. But people in other parts of the world, this is a normal occurrence in their life. And so just doing those kind of mental gymnastics of like, what's your worldview? How do you approach the world? I think that's a good way to kind of start the conversation. Or you can start with just the data. Like, hey, Bitcoin has been the best performing asset over the last 5, 10, 15 years. Here's the numbers. Here's how it compares to S&P and gold. And I think, from a more selfish incentive point of view, that's probably an easier way than the philosophical discussion. But I think you have to tie in both for it to fully, for people to fully comprehend the need. And then from the TradFi world, the biggest, the biggest point of contention is they think it's a speculative asset and it's like no free cash flows. But I guarantee you 99% of people in the finance world, first of all, they were probably lazy in college. They probably didn't actually, weren't academic. And if they were, that's great. Like, I'll have a more informed discussion with them. But a lot of people were just kind of trained to regurgitate what they, quote unquote, learned in their career and their academic experience. And through a very Keynesian model, they've been taught that, hey, this to be a investable asset has to have free cash flow. And it's like, when you understand Bitcoin as a tool, as an instrument, as opposed to like a stock, for example, it doesn't need free cash flow. That's like saying, does your computer have free cash flow? It's like, no, that doesn't make any sense. It produces, and it's a tool. It's meant to be used in one specific way to be a computer. Bitcoin is money. It's a tool. It's an instrument to store time and energy. It's designed for that and solely that. And it's the best at what it does. And that's just kind of how I like to approach the conversation.
Many people cannot think for themselves. Again, I was not here how I'm thinking now a few years ago. But now when I just realized there are so many things that, I can just find online and learn about and actually use to make my own decision. I found that to be better than just outsourcing it in a super unconscious way and never even realizing what I was doing. And that, I think, for me was the biggest click or like the biggest thing that I just realized is like, I don't want to outsource that anymore to people who are clearly less understanding of this one thing. So what actually does that tell me about all the other things that they do? So I don't know if that makes sense, but that was...
It definitely does. I think one of the overarching characteristics that's similar among all Bitcoiners I've met is almost that humility of, hey, I'm willing to be wrong, but I'm very curious. And like Bitcoin has kind of reshaped my perspective on approaching just life in general, because, I'm a great example of, as we talked about, like being the arrogant student to just like realizing that things are a lot different than how I initially perceived them. And it kind of lets you break down and rebuild from first principles. And that's why I like it, because it's just, there's so much substance at the kind of the base layer of understanding Bitcoin as a network, and then the asset, money, philosophy, etc. And there's so many different things that you can study that shape it all together. And all the time that I've spent, learning about it, like you mentioned earlier, it's like I just haven't found a way to see where this fails. And I think there's potential vectors in the future where maybe it gets dilutive, which I'm happy to maybe brainstorm what that could look like. But yeah, I just, at least in the next probably 10 to 30 years, I'm like, this thing it's just going to consume value at a faster and exponential rate than everything else.
Yeah. So where do you think we are now? Like, you've been really following this, studying this, you understand the thesis. People talk about like prolonged cycles, infinite cycles. There's no cycles anymore. Yeah. What are like the structural things that you are seeing that this could perhaps be different, or we're approaching a certain moment where this reconciliation actually gives more people the understanding that Bitcoin is a solution to their problem?
Mm-hmm. Yeah, that's a great question. I think there's a concept of adoption, and then I think maybe you alluded to kind of the structural 4-year cycle of like the halving cycle and the typical boom and bust. So I think maybe talking through the former first, really the Overton window is shifting, and I'm actually quite surprised at how fast it's shifting. It's very much sliding over to where it's becoming mainstream. I mean, it's being talked about on mainstream media outlets on a constant basis. You got the president and Congress passing laws about this. The federal government is, signed an executive order and maybe a legislative action to put it in strategic reserve. It's quite incredible to see. I think that is a symptom of it, the number go up, basically, and people gaining purchasing power to be able to lobby and educate and go out there and say, look, this is actually happening. And so as that Overton window slides over, it's more, it will trickle down from the highest levels down to the common person and it kind of just gets force fed into them. And like all the wealth managers will be allowed to allocate to 401ks and retirement plans, et cetera. Which, we just got news about today. So in that aspect, like the adoption curve is starting to tail upwards, which is really good. It's typically around when you hit 15 to 20% adoption, that things start going kind of up that exponential curve. And then to the question of like, what's a structural cycle? And I spend a lot of time trading the markets, investing in the markets with great success. And in fact, I'm actually starting a hedge fund, a Bitcoin-focused hedge fund that will take long and long short positions trading. And I can't talk too much about that, but I'm going to have some other fund managers who are well known in the space. Super excited about it. But yeah, it's like, that's what we're going to be doing professionally. And what I have noticed is that this cycle in particular there is a structural difference in how it's going up. At least compared to the prior 3 cycles, which have been largely retail focused or retail driven, really. It's like you get this boom and then retail FOMOs in and out. But what we're seeing is like just this constant institutional bid. MicroStrategy, of course, has been one, and you've got all the digital asset treasury companies also doing that. But you're seeing very real material allocations, even if it's just 1% by a pension or 3% by a corporation. In aggregate, that's a lot of dollars, a lot of purchasing power going into the system, increasing the market capitalization. And it's just the structured bid. And you can see it in the momentum indicators like RSI or like the MACD, for example, and that it doesn't stay overheated or oversold on high time frames like the daily or weekly for very long. It'll kind of touch them, stay there, and then come back down to like a 40 to 60 range, which is indicative of it being a more institutionally traded asset. So TradFi is getting in there and realizing that, if it gets to these like a 30 or 70 on the RSI, like they're going to start shorting it or selling it off, and then it's going to correct. And so it kind of, you get this smoother curve of adoption going up. However, the flip side of that is, as Lynn Alden has produced in her research, it's very sensitive to liquidity. M2, as everyone says, in that it is going to follow a bull and bear market in terms of how liquidity is flowing throughout the economy. And that's just by nature of how liquidity is introduced into the system and us being in a credit-based spending system. We just got rate cuts, for example, and we're probably going into quantitative easing pretty soon, on top of the highest debt ceiling for spending ever. And all of that is super inflationary from a liquidity expansion standpoint. So I think a lot of people are expecting like a Q4 blow off top, similar to old cycles. And, people are talking about diminishing returns. I think we will trickle up just by nature of the rate cuts are going to stimmy more liquidity into the system. But I don't expect a prolonged bear market in 2026 until the tail end of 26. I actually think it will kind of follow a very volatile path upwards throughout 26 because liquidity will be expanding. You have U.S. midterms coming up in the fall, and Trump is most certainly going to be spending to get market favor. And then after that, probably Q4 26, I'm expecting something to break and a restructuring in the system. I could be wrong. I could be dead wrong, but that's just what I'm noticing in momentum and just structure of how the market is playing out compared to prior cycles.
All right. So we think we're seeing this mathematically assured path towards this credit event. If you look forward, what would you say are the hurdles or the challenges that remain for Bitcoin to actually be that solution we think it is for the problem that we've identified? And I mean, that could be in the US, could be internationally. Like, what would you say are the biggest challenges for Bitcoin still?
Yeah, it really comes down to adoption. Are people buying it and using it? Are they using it as payment as it was intended to be? Or is it just going to sit on balance sheet? And I think all of that actually just plays itself out. Right now, the institutions are saying, hey, this is looking legitimate. We're going to make some smaller allocations. And I think a lot of Bitcoiners might be, in the short term, a little disappointed with price action. I'm elated about it. Like we've been sitting over 100K for 5 months. People are talking about paper Bitcoin. It's like you have to realize there are all these new markets that like traders and investors and money and market makers, they're going to be shorting it. They're going to be, arbitraging it. And so that just creates a lot of derivative action on top of it. But the short answer is the more spot that gets taken off of supply, the more explosive like a green candle is going to be over time, assuming there's a kind of black or gray swan event. And, institutions are bureaucratic. They're slow in making decisions. They're more calculated. They have to reach consensus among their organizations. But unlike a real retail trader who, is not going to move the market, or even in aggregate, the retail traders, institutions have a lot more purchasing power. And so when they make a move, they're investing even a 1% to 2%, is typically multiple millions. And so they are making large moves, like a giant move. And so in aggregate, that starts moving the market upwards. And when they start making 5 to 10% allocations, this is when you start running off and getting a huge melt up in price. And in some regard, there's going to be a lot of people kind of waiting and watching, and then realizing that everyone's starting to adopt this in a snowballing way. And then your store of value thesis plays out over time. Then the question is it going to be a medium of exchange? Is it going to be a unit of account? And I think actually those two start playing out kind of in tandem. But I don't think it will happen in the next probably 5 years or 10 years. I think probably in the 2030s is when we see that happen, because there's going to be some economic turmoil. And then Bitcoin will have proliferated to probably 40 to 50% adoption. And, if you look at just kind of like monetarism and like economic theory, like the way markets work is you get the asymmetric ride up and then they start flatlining. And so what I mean by that is when Bitcoin is multiple millions per coin and the market cap's 50 trillion, well, your hedge fund that's pulling out 200 billion in a trade, that doesn't even move the market. Versus today, that's going to be a 3 to 5% drop in price action. And so you get so capitalized, the volatility compresses to zero. And now people are willing to actually use it as money because there's no longer that asymmetry. And people, you might think like, well, in 20 years, why would I want to use it? Well, it's like, that's like saying, well, in the 1980s, why would you want to use the internet? It's like there's this asymmetric opportunity of the internet and creating companies on that. But when it's proliferated, you still have the internet. It's the best form of communication that exists. And by then, it's the best form of money that will exist still. And people will want to use it, save into it, and spend it. And so medium exchange plays out. And then the last question is it become a unit of account? And this is where I think a lot of even Bitcoiners haven't really done this thought exercise yet. And as an accountant, this actually makes the most sense to me. It's like, we standardize everything in the world. We've standardized time, on hours. We've standardized energy. So our own human capital, dollars per hour or euros per hour, whatever. We've standardized, commoditization of energy, like, gallons, for example, or whatever quantity measurement you use. Bitcoin captures time and energy. It's the perfectly standardized money. Why have we not standardized money yet? We have all these different currencies that fluctuate. It's like, we have this thing that's perfectly scarce in denomination. That's where you get the everything divided by Bitcoin, motto and really the book. But then the question is like, what does the world look like when we're accounting for things in Satoshis? And I'm not sure, have you thought about that? Like, it's an interesting thought experiment, because by then your like monetary policy completely changes. It's no longer about how much currency can we just pump into the system and spiral into debt. It's about, pricing in terms of perfect denomination. Well, like, if there's more Bitcoin in the US and less in, for example, India, well, like, the pricing of a loaf of bread is going to be different in the US versus India. Why? Because pricing in India, where there's not enough Bitcoin, those prices are going to come down so that they attract more liquidity, more Bitcoin into their geometry or geography, so that, money is just an aggregate. It's just demand. And so the supply of a good, it's going to come down to attract demand. And so you get these kind of differing mechanics and prices. So monetary policy changes to be more focused on fluidity and velocity of money, as opposed to just printing money.
Yeah, wow, well said. I think on that last part, connecting that to the thesis of Jeff Booth, I think Bitcoin will actually usher in finally, I would say, a positive reinforcement of deflation coming from technological advancements, right? Like you said, if there is less reward in a certain place, you have to innovate harder to get to that reward. So you're incentivized to not F around anymore, but to actually start creating real value. So that idea of that extreme equality of opportunity, I think, permeates even through that, like on a country level. If this is the thing that you're battling for in the global market, in the global market, then you have to figure out what your value is and become really good at that. And I find that fascinating, that there is conceptually, right, an opportunity to actually get there. And then I think about, wow, like, where could we even be, like, all together, right? Because, combined with this is, of course, the whole proliferation of AI, like using that as, something that you can do today. Like, you can reverse engineer entire businesses, entire products, right? Physical and digital. And so also that innovation that maybe takes place in a certain country or geographical location then actually gets commoditized also in a faster way. And just that messes with my head, but I think it's very positive. Like that outlook I find very, very interesting. And from that accountant perspective, I have to think, so that's a tip for people to check out. This is a podcast from 3 years ago on now on the Peter McCormack channel. So that was on What Bitcoin Did with Darren Feinstein. You know him, Feinstein. Title is Bitcoin, the Greatest Money System with Darren Feinstein. That is one of the best Bitcoin podcasts I think I've ever listened to. He talks about a concept called triple entry bookkeeping, that Bitcoin is the money that actually allows us to create a new way of bookkeeping, right? Like the real immutable, right? The triple entry is the immutable part, is the triple, the first part is that, you can never change this ledger anymore. So you can do the double entry bookkeeping, including the immutability, which incentivizes you to do the double entry bookkeeping in a correct way, because if you abuse it, it'll be immutably archived forever, right? So that is where a very big incentive comes from, to actually behave yourself when you adopt this money, I think is the shortest summary to that. And I know Darren is actually writing a book about it, and so I hope to talk with him about it. But that to extend on what you said, I think if people listen to that, you will really get to what you just said now, because that is probably the most under-discussed revolutionary part of Bitcoin. One of the most under-discussed revolutionary parts of Bitcoin. That what that engineered truth of the Bitcoin ledger actually brings, translated to the real world, is not highlighted enough. But that is, of course, also for the future. So I hope we'll get there. I think you and me both will keep paying attention to this for the rest of our lives, to hopefully see that happen. So I want to thank you for kind of like talking through the thesis as to why Bitcoin, where we are at, where we're going, why people need it. And I just wanted to wrap up with a question that I ask everyone. I ask everyone the same question, which is, what is a core belief that you will never let go of?
Yeah, I would say never doubt human ingenuity. I think individually we have our own limitations, but when we come together as a community and as a people, we can create some really amazing things. We can fly in the air with machines. We can build perfect money. We can build other forms of alternative intelligence. And it's quite amazing to see. And my hope is that through Bitcoin, through a more equally incentivized system, that it will launch into a world of innovation unlike anything we've ever seen before because of that.
Awesome. Well, that's a great ender. Thanks again for your time and your words and your wisdom. And I'm excited to see what you're going to build next. So let's stay in touch. And thanks again, man.
Thanks for having me on, Bram.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.